I'm not saying the bottom's falling out. I'm not saying the bubble is bursting. I'm not saying the world is ending. I'm just saying the data can reflect what is happening in the market when you look at the right numbers. So I think a lot of people are talking about the wrong individual numbers when they're looking at the Denver metro housing market as a whole, or any housing market as a whole, because you're trying to figure out trends, patterns, risk, and opportunity. That's why a lot of people are going to analyze data or look at numbers, but you have to understand the data sets that you're looking at. And today is going to be a good example of that because I spent a little bit more time digging this month, and that's why I'm a week later than I normally am for this. I wanted to show a few things to help set realistic expectations for the market that hopefully will land with a lot of people that are trying to figure out, what do I do? What's the market doing? All of that. Because everybody wants the big number that they hear to be the case for their individual situation, and it's not. As far as seasonality, we have our typical annual appreciation happens in the spring. We level out in the summer and fall down in the fall. We usually get a little bit of an uptick in September or October, just depending on the month. However, that is normal. That's going to be the case this year too. We just haven't had as big of an upswing in the spring. So depending on what happens this fall, I don't know if we'll be flat for the year, take all of that appreciation or only take some of it. But we just took a good chunk in the last month through the month of July closings and activity reporting in the beginning of August. We're always looking backwards when we're looking at these particular numbers, but showing activity is going to look forward because that's what's saying, okay, who was looking at houses last month? That'll say who's probably going to buy them this month and close next month. Looking at that, we just lost a good chunk of our spring or annual appreciation. I expect a little bit of an uptick in September, October, especially because the quarter point of rate drop that already happened last week, even though the Fed hasn't cut rates yet, a lot of the mortgage market is already pricing that in. The good lenders are sending out information about how if you wait for the Fed rate cut and then something crazy happens, you're behind the boat. You have to watch what's happening all the time versus waiting for the national news to talk about it. Once they do, then everybody thinks about it and then you're already behind. Close price went down, average price took a hit too. That's not a surprise. A lot of that's going to be seasonal. We do usually take a chunk off, but that was a pretty good chunk. That one kind of hurt. As far as activity, I'm not going to go into a lot just because I want to hit 4 main points that are a little bit more nuanced than what I'm usually talking about. When I'm looking at data and trying to see what those patterns or trends, risk, or opportunities are, these are the things that I'm seeing this month. I spent a little bit extra time doing some crude data analytics on my own. These are things a lot of people aren't talking about. However, the numbers that people are looking at, when I mentioned that I think that people are looking at the wrong numbers, this still overall, let's go max, this still shows a gradual annual appreciation, right? It was nuts here. It was more gradual here. It was oddly enough existent, but relatively stagnant from 2009 to about 2011 to 2012. And then we started taking off a little bit, but it was stagnant there. This shows some smaller, more conservative annual growth, but that is on the prices of homes selling in the 7-county metro, because that's always what I'm looking at. So not Boulder, not the mountains, just the 7-county metro. That still shows some gradual price appreciation. But what I talked last month was that there's more $1 million home activity than under 375. If people are buying bigger homes, the price will continue to go up if more big homes are selling. So let me show you that in another number that I like to look at, especially in the second half of the year when I'm talking to investors looking for deals. Price per square foot. There's a lot of controversy on this number, right? Because this doesn't take into account amenities that a condo may have or an HOA that has tennis courts, pickleball courts, basketball courts, pools, different ones throughout the metro have versus others that don't, and people pay for those amenities, but it's not necessarily a size of the house. However, when you're trying to look for the great equalizing factor in a big data set to draw conclusions and trends and risks and opportunities, this one to me shows people are buying the bigger houses for less money. So you can see how stagnant this is over the last 2.5, 3 years since the rates jumped up in March of 22. That was April closings. Those people were already under contract. They just sucked it up because they already had a house and they're like, oh my gosh, now it's going to cost a lot more than I thought. Fine. But then everybody else backed out. The market corrected since then. It's been pretty flat, guys. People are just buying bigger houses. And I'm telling this to my clients, and they're like, but I know the market's gone up. Is your house like $950,000 and it's appreciated $1 million? There has been appreciation. for certain segments of the market, but not most of it. And that's where looking at the close price only is the wrong number right now. It does not take into account that people are buying more house for less money. And I'm going to show you a few other ways that I'm seeing that too, to also reflect what we're feeling in the market and have it show in the numbers versus just people telling you numbers of prices went up and everything is good. And there's some correction in the market. I'm not saying the bottom's falling out. I'm not saying the bubble is bursting. I'm not saying the world is ending. I'm just saying the data can reflect what is happening in the market when you look at the right numbers. And y'all know me and my passion about numbers. The price per square foot is a good indicator of that. But let's go ahead and chalk that out to price per square foot by price point. And I know as a house starts to appreciate, it starts to push into the next price point. Therefore, this is not the perfect number either, but I'm looking at a combination of things. There's a lot going on here. Let me give you all a legend so you can actually see it. It's up on the top here or over on the side. One thing I did change from last month is I actually went to $375,999 because a lot of properties will sell $375 and 000. Last month I had $374,999 and less. I wanted to make sure that anything sold for $375 or $375, $500, whatever was captured in that first data set. That changed things slightly, but not significantly. Look at this. Your $1 million stuff looks flat. Doesn't look amazing on dollar per square foot, but I just told you we're pretty much flat for the last 2.5 years, 3 years for the market. But look at these. Okay, prices leveled off, but we are not only flat. Look at the blue. Let me back this out to some rolling trends here. Rolling 3-month. Look at what has happened, and I've shown you all this the last couple of months. For the entry level, $375,999 and under price point. That has just gone down. After the rates adjusted, top of the spring season in 2023, that was $306 a square foot. And it's not unusual for that to be higher. The property itself is physically smaller, but you have a lot more amenities. It's a condo. But look where that has gone. Down, 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 down. $272. So dollar per square foot on a under $376,000, technically the right term now, condo is now less than a $800,000 house. Even though you get all of these amenities, you may or may not get external maintenance, you get all these other things. People don't want to buy them. You have to understand that. I have major concerns on the stability of the condo and townhome equity market as far as people who have invested in those. And if they have to sell, they may not get their money back out depending on when they bought it. Because of HOAs, because of insurance, your dollar per square foot is the least on that type of property, which almost costs you the most as far as living in it month to month. You get the least amount of living space for what you're paying every month, but people are willing to pay the least amount for it. But even some of these others, your green lines, your $700 and $999, that's flat too. People talk about, oh, our market's still appreciating. I don't see it. Certain neighborhoods, I've seen it. Certain price points, I've seen it. As the market as a whole, we've been flat for the last 2.5 years. So when I run comps, I run them 2 years back. People say, that house sold 2 years ago. The market says it's about the same over the last 2 years, depending on which part of the season you're falling into. Anyway, that's enough of my rant about that. That's two of the things I wanted to talk about at the time of year appreciation. We're going to level out and lose some for the rest of the year. Be prepared for that. And also the dollar per square foot piece being a little bit more of an equalizer as far as appreciation in the market. And by price point, that's important to understand, especially if you're trying to sell your house or if you're going to buy a house, see what your opportunities are. Showing traffic, it's been slow, right? A lot of people are like, oh man, there's not a lot of buyers out there. You're right. There's not. The last time there was this few or less buyers out there, there you go. April of 2020. That was the last time there was less people looking at your house for sale. Now, there were 3 people a month, and those might have been virtual showings. Luckily, here in the state of Colorado, we were considered essential because everybody needs a place to live. But when everyone was in lockdown was the last time showing traffic was slower than it is now. I just want people to understand it is slow out there. My sellers tend to get 3 to 4 times the monthly traffic for their property type. A lot of that is because I have conversations with them about pricing their property for the current and upcoming market condition, not the one we just left that everybody else is looking at. I'm using the data to help them look forward and make a better plan. So I will say most of my sellers, they're not calling me to sell in 2 weeks. They're calling to sell in 6 months or a year and a half. We're making that game plan. Those are my type of people. Those are a lot of people who watch my data on a regular basis. So if you have those questions, I have a link down below. You can pick the quick question right off my Calendly link. And if you want to sit down and make a game plan or do a consult on what your property's worth and talk about those kinds of things as far as really strategy and pricing and best opportunities for you, then I have a seller consult option for that. I do want to talk on the phone first because I want to see what your goals are and what makes sense for you. Anyway, yes, traffic is slow. Pricing your property for the current and upcoming market, understanding that it needs to present well, that you likely have competition. I do have a client that I told them, I won't list your property for sale until we can find a lender that can approve it. For condos and townhomes, that is a struggle right now. The last thing I want is for you to go through that hassle of getting your property on the market, finding a buyer, going through price drops, negotiations, and then, oh, wait, that buyer can't get a loan because of something with the HOA or the complex. But we can do a lot of that legwork up front, because it doesn't make sense for anybody to spin their wheels, and you need to have enough information to know, okay, do I want to sell this now given the current condition? Do I want to see if I can talk to my HOA and we can change things? That may make a 30, 40, 50 plus $1,000 difference in your pocket. Having enough information to make an educated decision. Y'all know me. Showing traffic was slow. Yes, it's slow like COVID slow. And then list price data. Here's something, percent of close price to list price. Essentially, what's the negotiation margin? So this is, hey, a house is listed for $665. It actually closed for $650. What's that difference? How much of its current list price, it's a big thing, did it actually sell for? In 2010, things sold for a lot less. There are some additional fields in the MLS now. This looks at the current list price, not the original list price. And that's good in a way. But when you're looking at pricing your property, a lot of people are looking backwards because they're looking at the comps that sold. You also need to look at what the market condition is going to do in the next 2, 3, 4 months if you are looking forward. You need to understand you're not going to sell your house in the past unless you have a really capable DeLorean with a flux capacitor. I don't have one of those. And even then, it's a little sketchy on when you're going to hit. So understanding, okay, what did those sell for? What time of year was that? What competition was there at that point? And now what do we have? Now what competition are we looking at? Now what's the market condition and what are we going into? So let's at least be what today is. Ideally, be 4 to 5 weeks from today because that's where the market's going. So you're going to be better than all the competition that's just going to ride it out and become the averages. However, that's nice on showing what the margin is to the current list price, but it doesn't show sellers the unrealistic, hey, you overpriced it by too much and it took you 3, 4, 5 weeks due to the price drops you needed to get to the current list price, that someone is willing to come look at your home and then make you an offer. So me and my nerd self did some pivot tables, crude, not polished, but I wanted to get you some data. And it's not perfect, and I prefer medians, but I don't want to do the workarounds to get medians out of a pivot table. I'm just using the averages because I want people to understand that the average of the close price to list price, I got 98%. There were technically 3 more data points in my data table, 98.9. Oh, okay, maybe buyers are negotiating a percent or so. From the list price that got you an offer, not from the list price you started at. So from the list price you started at, this is by property type too, if you want to look at that, just fun. And then I can also filter it by city. So these are the kind of crazy things that I look at. From the original list price, they're almost 4% different, not 1.2. That shows your margin that you're off is almost 3%, 2.9 to 3% as an average across the market, looking at all property types, prices, and areas. Big caveat. But that shows that sellers are overpricing their property to the current market condition. This is for all the properties that closed in July. So the people that listed in May and June, given our average days on market, depending on the property type, the sellers that listed their properties for May and June, on average, were overpriced by 2.9 to 3% to even get an offer. That doesn't mean your house lost value. It means you overpriced your house. I have that conversation all the time with people and they don't understand it. If you bought your house 15 years ago and you think it should be worth $700, but you had to do price drops down to $665 to get an offer and you sold for $650, you didn't lose $50,000. You didn't have it in the first place. Your house necessarily wasn't worth that right now. Just because it was 3 years ago or in April of 22 does not mean that's the case right now. Housing market is a market. It adjusts, it changes, it flexes. There is different buyer demand. There is different seller supply. Have to understand that. Just because you saw a number on a website of what your house was worth, it is not gospel. It's why I have a job. You can see realizing that you're overshooting the price in the first place is the reason it's sitting on the market. With my sellers, why we're getting the traffic is I'm like, hey, this is where we need to start.
We need to start at the list price of where the market is now or where the market is going to get people in the door faster, to get more activity. So we are not going to ride the market down. Or maybe we make a better plan for spring and we know where it's going to go, but you get ahead of it. So you get the people that are expecting the higher price and now you're a deal or whatever it is compared to the competition. The other thing is concessions that people aren't talking about. There's a lot of concessions in our market right now, a lot. So what concessions are essentially the buyer says, I'll give you 650, but I want you to give me $5,000 back or $6,500 back, 1% concession. And then as a buyer, I want to use that to maybe buy down my rate with the lender and make it more affordable. Or maybe during inspection, we negotiate some items and you don't want to fix them, but I'll take the money to fix them. Or maybe now that people are finally having the conversations of the buyer has to pay their agent, but the seller isn't willing to pay all of it, maybe a portion that goes to pay the difference for the agent that the seller doesn't want to pay for. There's $6,800 on average of concessions. And on single family homes, that's $7,200. On condos, that's 4,000. That's a pretty good chunk. When you're looking at average price of single family homes, you're talking 1% plus or minus a little bit here on concessions. That needs to be factored in as well. That's really the net price you're going down to. The net close price compared to the original list price where the sellers are unrealistic to start in the first place, given the current market conditions, you're looking at about 5% less. Doesn't mean your house lost 5%. It just means you didn't understand the market in the first place. Because once you get to where the market is, this is where you're at. That's the keeping the buyer in the deal amount on an average as a whole for the market. Every property is different, which is why real estate agents have a job. Pretty long rant. I hope you were able to click through, skip the parts that you want. If you have questions or want to make a game plan or you want somebody that does this type of data analysis, because I'm nuts and I want my people to understand what we're going into and I want to plan for as much success as we can, but I can't control the market. I can see a lot of what it's doing and we can plan for that. I have a link down below. You can reach out to me if you just want to have a quick call. Happy to do that. I'm always going to talk on the phone before I meet somebody in person because that's a better use of your time and my time. Anyway, hopefully this was helpful. Leave a comment on what you thought or what nugget you got out of it. If you got a nugget, hit the like button. I'd really appreciate it. Thanks so much for the time and have a good one.